Hi, and welcome to Chamber Chat via Zoom. I'm 𝗨𝘵𝗵𝗺𝗃𝗃𝗀𝗃, President of the Greater Lowell Chamber of Commerce. I'm so excited to have one of our newest members on with us today. We have NewFed Mortgage. We have Melody Anoli-Marcotte, Loan Officer, Dennis Fiumara, Senior Loan Officer. Before we get started, I have to say, Melody and I go way back. So you are new to the Chamber under NewFed, but you were a member prior to that, and we're just so excited to see you again.
Thank you. I'm so happy to be back. COVID and all that.
I know it's so good, and we actually got to meet in person, which was really great, and that's going to continue moving forward. So things are looking up. Very exciting.
Yes.
So can you tell me a little bit about the both of you, who you are, and then we'll talk a little. Actually, we'll talk a lot a bit about NewFed.
So I'll go first. I've been forever. So I came from NewFed Mortgage this year. I previously have been working in a financial institution, and prior to that, I used to work in a health club, the health club industry. And what brought me over to NewFed was the same kind of thoughts that I've had, you know, moving forward in my career, was just helping others. And NewFed was an amazing company that I saw that just reached out to their clientele and their customers, trying to assist them with their, you know, home ownership needs, whether it was whatever stage of their life, you know, you were in. You know, for about 25 years, I've been just individually, you know, identifying different plans for people. And this allowed me an opportunity to grow that passion that I have. So I ended up meeting Dennis at my prior job, and we had a great connection. We worked together for, I want to say, like 4 years, and here we are. We branched off, and Dennis can tell you about him.
Yes, a little bit about me. I've been in the mortgage industry since 2010. I jumped into the industry after I graduated from Bentley. I started in the operations, which gave me a great background in terms of the process of mortgages, all the different guidelines. I worked at Sage Bank, formerly Lowell Cooperative Bank, from 2010 to 2018, and then I jumped on board at 𝗨𝗵𝗺𝗺𝗃𝗃𝗀𝗃. I got the opportunity to work with Melody in the Tewksbury branch, which was fantastic. We had a great relationship, and in February of this year, I decided to change from 𝗨𝗵𝗺𝗺𝗃𝗃𝗀𝗃 Bank to NewFed Mortgage, which has just been an awesome change, and Melody came with me, which obviously I'm ecstatic for.
Yeah, you guys have such a great energy together. So I'm so excited to let the listeners know more about NewFed and what you have to offer. Yeah,
so NewFed offers a wide, you know, variety of different products. So I mean, I can kind of jump in a little bit in here, but anywhere from adjustable rate mortgages, fixed mortgages, conventional mortgages, jumbo, you know, mortgages. I could go on and on. I think what I want to emphasize the most is wherever you are in the stage of your life, they're able to accommodate that. You know, we can help with first-time home buyer programs. We're able to assist people that might be renovating. You know, it might be a time where they're looking and they're expanding their family, and now is the time to maybe add on that second floor, and they're, you know, may not be ready to actually take the jump for a bigger home. So this is the time to, you know, take out some of that equity in their home at a fixed rate, that they're able to do whatever they need, maybe renovate those kitchens that are in the 80s and 90s, you know, like mine was, you know, get rid of the paneling, get rid of the, what did you say, pink kitchen and the lime green bathrooms, get rid of that. The shaggy rugs I still love, but whatever, that's okay. So that's the time that we can sit down and see, you know, what do you need? You know, how can we accommodate you? We even work with, like, you know, the renters looking to first-time home buy. They have, you know, a great variety of different products. I think I'm probably missing.
Yeah, I mean, we offer a bunch of traditional mortgage products, but we also offer the non-traditional products. So, you know, a lot of customers that are self-employed, their income is evaluated a lot differently than, you know, maybe their true income. You know, so we have different programs where maybe we just look at their bank statements for deposits, or you know, other programs where, again, you know, they're not a traditional customer, may not meet every single traditional guideline. So we have those other products to help them out and make sure that there is an option for them to obtain, you know, finance and to the home that they want to buy.
Yeah, like FHA, VA, USDA, like all of those are all covered under, what NewFed can do. Sometimes we're looking at right now, some people are looking at second homes and investment. This is the time for, them to maybe jump in and see what, we can offer for that. So we've done a lot of those lately, which I think is amazing, because this is the time where, you're able to settle down, and some, want to downsize. The kids are getting out of the house, they have this big, huge home, maybe it's too big for them. Or then, they want to keep it for the family. It's just crazy what,
yeah, there's so many different products out there, and our job is to make sure that we're putting you in the best product for you, right? We always want to maximize our buying power. We want the lowest rate possible, the lowest payment possible. So our job is to take a look at your current situation and make sure we're putting you in not the best product for ourselves, but the best product for you.
I love that you mentioned that. And it sounds like you have flexibility too, that if you go get your mortgage somewhere else, you might not have that flexibility that you offer at NewFed.
I think the number one thing that is different is, and Dennis says this all the time, and I love it. I don't know what it is when he says it, but I love it. He says, what payment do you feel comfortable with? What payment do you have right now? Back into it, instead of saying, okay, this is the payment of what, gives you this home, when you really cannot afford it. It's like, what do you feel comfortable with? Knowing your background, knowing what you want to do, knowing what your other payments are, or what you're planning on doing in the next year or two, maybe buying that new car, there's a kid going off to college, like all that gets into consideration. You can't just look at what's happening at this moment. You have to look at the 5-10, year time horizon for people, because they're in that payment, for 30 years.
Correct.
Great point. What are some misconceptions about home buying?
So I think a lot of customers kind of go back to buying and thinking, oh, I want to put down 20%. So down payment is definitely a misconception that I hear about all the time. I was in at an open house last weekend, and a customer came up to me and said, hey, my son's looking to buy, does he have to put down 20%? And I said, I took a step back and, informed him that a lot of buyers these days are not putting down 20%. As you probably realize, the cost of houses has increased substantially over the past few years. A lot of customers these days, first-time home buyers, are putting down 5% or 3%, or looking to get 100% financing, which we do offer with different programs. Certainly, if you have the 20% and you're looking to put it down, great, good for you. That will help you lower your payment. But a lot of customers do not put down 20% anymore. People think credit scores, you need 700, 800 credit scores, and it's true that the higher credit, the better terms you'll be offered. Having said that, we've all gone through situations in life where maybe our credit has taken a hit for whatever reason, whether it's medical, or there was time where you were laid off from work and you just couldn't pay those credit card bills. The way I look at credit is, however your credit score is, when you come to us, we want to help you get your score up. And, if your score is really in the 580 range or higher, we have mortgage products for you. So don't think that you need a 700 credit score or an 800 credit score to be able to get a mortgage. That's definitely not the case.
You can go slow.
We can go to a 580 credit score. Again, there's other factors involved, like down payment, income stability, but a 580 credit score, for a lot of people, when they hear that, they're not thinking, oh, I can buy a place. But in reality, you can buy a place with a 580 credit score. One other big misconception I think that's out there is PMI. That stands for private mortgage insurance. Everyone says, I don't want to pay PMI, I hate it. But there are sometimes benefits of not putting down 20% and having a loan with PMI. For example, a lot of the PMI providers out there will actually offer benefits to their customers. For example, if you lose your job, they may be willing to pay part of your mortgage payment for a certain period of time. There's also the other factor that oftentimes when you're putting down, let's say 15% compared to putting down 20%, you may actually get a better interest rate because that loan has PMI and the lender is protected in cases of foreclosure down the road. So it's very important to look at the whole payment when you're evaluating your mortgage options, and not necessarily look at PMI as taboo.
You guys really know your stuff, which is why I'm excited about this next question. With home values at an all-time high, is it a good idea to tap into your equity?
So right now, I mean, we'll see across the country, equity is at an all-time high. And, you know, when we think of in America, how we kind of finance big projects like renovations, a lot of times we do need to tap into our equity to finance renovations. So whenever a customer is coming to me and saying, hey, I'm looking to take some cash out to do renovations or to consolidate debt, whatever the reason, I try to figure out, are you going to be in a better financial position after you tap into your equity or not? So if you're, you know, you mentioned renovations, if you're looking to add a second story, you know, that's going to be a pretty big expense. But at the end of the day, you're going to add value to your house and your equity is going to increase after that. If you're in a situation where maybe COVID, you were laid off for a period of time and you had to rely on credit cards to kind of get through the time, and you're looking to tap into your equity to consolidate that debt, pay off those credit cards and roll it into your mortgage. Again, in that situation, I think it makes sense, you know, as long as you're getting rid of that debt and not going back out and kind of racking the credit card balance back up.
You just swap in like sometimes a 25% credit that the rates are hovering around maybe 5%, but in the long run, it's a definite worth it. And the other piece that I think I looked at just personally is like having a home equity. When I renovated, I thought, okay, I'll use my home equity, but that is an adjustable rate. And with you know, what's happening, the rates are starting to, you know, increase. The Feds are going to, you know, make another announcement again. Those adjustable rates are, you know, if you're holding on to a home equity with a large balance, it might be the time to like maybe consolidate that home equity balance into a fixed regular rate, so that you're not going to have to, you know, I guess, sleepless nights. I don't like those, and, you know, worrying about like what's going to happen with my rate, you know, in December. Could we be at a, you know, adjustable rate at 7% on a home equity because it's all based on prime, where you can sleep at night knowing it's a fixed rate and your payments are consistent. Something about knowing consistency. So yeah,
being consistent, knowing your budget, and really, like you mentioned, correct, the rates, right, on credit cards. We look at a lot of credit cards for people that are getting their first cards. Maybe they're at 25%, maybe they're at 30%. Even customers with excellent credit, their credit card rates are still, you know, in that 8 to 15% range. You know, another big expense that we have is student loans, right? So we all wish that college was a bit more affordable. The reality is that a lot of people going to college have to take out student loans. Unfortunately, student loans have, the rates aren't as high as credit card rates, but they're still rather high, you know, where you see a lot of student loans that are over double digits, where it's 10% or higher. Taking those student loans and potentially roll them into your mortgage hopefully gets you where you're paying a lot less interest on that cost and that expense.
And I think it's also too, like, having one payment going in one place versus I got to make this bill out to this institution, this bill out to this institution, I got to send this payment over here and this payment over there. You start to lose track of like the money coming in. So you know, it makes your budgeting a lot more easier and defined. If that works for you, it doesn't work for everybody, but it might work for you.
Yeah. And that's the benefits talking to you guys. You can both talk through different scenarios and really get to know the person and their situation and find out what is the right products for them.
Yeah, that's why it's so important to really get to know the customer up front and figure out what their goals are. Because, you know, everyone has different goals. Some people want to pay their loan off faster. Some people want to open up cash flow so they can, you know, really live their life a bit more. So in those initial conversations that we have with customers, we try to ask, what are your goals? What are you looking to get out of, you know, this refinance? And when they share their goals with us, we can kind of give them the options to meet those goals.
Yeah, we have like a questionnaire immediately that we give like our customers that they need to, so we can profile them. They're the huge piece to this puzzle. We're just here to give the options. They're there to really drive what they want to achieve. So based on their answers is what we can offer. It's not like, okay, I want to refinance and here's your rate and we're running a special. Like those, whenever I see somebody advertise that, that's not what it's about. It's like, what is your goal? Like, where do you need to be? What do you see in 5 years? Is there a baby on the way? Is there somebody on deck for student loan? Do you know if there's going to be a loss in the family? Are you inheriting any money? Like all that, plays a huge factor in if this is the right avenue to even, do for that particular person, so, yeah, that's.
What do you say to people who are renting and want to buy?
So I look at home ownership as, really, it's part of the American dream, right? We all want to own a home or a condo or some kind of residence. And, at the end of the day, really, when you look at it, a lot of people that do buy a house, they're renters before and they buy a house, with every single payment that you make, you're increasing your equity and you're putting yourself in a better financial position for retirement down the road. One of the big things that I tell customers is reach out to us early.
Yeah.
If you're in a lease, a year lease, and you have 6 months left, that's a great opportunity to start looking at, getting pre-approved, seeing what your current status is. That gives us enough time to pull your credit, review all the numbers, and let's say you have a 640 credit score. Maybe we can give you some tips to get that credit up. Again, not that you can't buy a place now, but you just want to be in the best position available when you do submit offers. So it's really important to start that process early. With inventory the way it is, we are seeing it's taking buyers a little longer to find a place and get a place under agreement. But that's all time that you have, to get yourself in the best position possible for when you do buy.
I think what I did when I was doing some research on renting, because I have one of my sons that was rent, buy. I started to look and I felt like, geez, renting's changed maybe from when I was like looking back in the old days. Everything's kind of like a la carte, it's like, oh, if you have a dog, it's X amount of money. And then if you have 2 dogs, it's X amount of money. It's like, okay, so can you bring your dog or not bring your dog? And then it's like, how high can the rent go? And then if you want a garage, it's this much more. But you're looking at principal and you're looking at like a rent of whatever the payment is, but then you're tacking on all these extra things that are on top of a rent that sometimes can supersede actually what a mortgage payment would be when you compare the apples to apples on that. And that's why we say, just get a free pre-approval from, a lender, or us or somebody, so that you can see, hey, this is what I can qualify for. I'm actually spending this in rent. This is where I'm paying my landlord's mortgage. This is where I'm paying my self-equity. This is where I can have as many fur babies as I want. This is where I can have to, like telling me how many, you know what I'm saying? It's like you're, oh, I can color, the change of the wall color in here and put a picture up and move whatever I want or put a door in. Over here, I can't do anything, so it's like giving that control back to somebody to say, geez, I want to do this and remodel that. I wish the kitchen was over there. Well, you can't when you're renting, but you can when you're owning,
And
I love
to go back to what we talked about financial stability,
right?
What we're seeing is rents are increasing significantly of late, and to be honest, rents have always increased year after year. It's just a matter of at what rate do they increase. So when you think about someone that's been renting for 10 to 15 years, maybe they would have had the opportunity to buy the single family house for $250,000 that's now going to cost $500,000.
Yeah.
You would have had that stability in the payment and not necessarily have to worry about your rent fluctuating in 2 years or 3 years, where the market may very well be higher at that point.
Right. Rates are going to go up and rates are going to come down, and you have the opportunity that if the rate is going up, to refinance down the road to a lower payment. But I can't imagine somebody knocking on your door saying, we're going to drop your rent $200, going forward. Like, it just doesn't. Rents are going to continuously go up. So you have really no control over that piece of it. But it's up to the individual needs, obviously, for that. But yeah.
So don't be intimidated. Reach out early. And at the end of the day, we're here to give you the information, let you know what the payment would be for, buying this condo or this single family. And at the end of the day, if it works out where you're looking at the numbers and it is a better situation to buy, then awesome. You can kind of take the next steps of submitting offers. If it doesn't work out where you think that you can't buy what you want right now, at least you know where you stand, and then we can give you steps to hopefully get you into, your house or condo, what you're looking for down the road.
And we partner with, some pretty qualified realtors too. So if they really don't know where to begin, that we can go from A to Z. So they're getting not just, okay, this is my number, now where do I begin? We can put them in touch with a realtor where, they can start getting emails within their price range, and they can, move forward with that. I want to quickly jump in there though, to say with NewFed, we do lend in, in New England, minus Vermont, we lend a lot in Florida. So those people that are looking for second homes, like those snowbirds, which I'm trying to get down there, we're able to do that. We're not just in one particular area. We're in Wisconsin, Missouri, we're everywhere, but we lend all around here, New Hampshire, Maine, Mass, Florida is a big one for us. So we're open to many states.
And you truly are a resource for folks.
Right. Yeah. So if they're looking at that second home in Florida, definitely reach out.
There's people watching now that are like, I should start looking into that second home in Florida.
I know. Yeah. There's a big difference in, when you were talking about investment property versus second home, people kind of get confused with the fact, I'm just going to get an investment property versus a second home, you know what I mean? And able to look at those numbers a little bit differently. Because they think, I'm going to get a place in Florida, that's my investment property. And you're like, but are you going to be living there? Well, that's your second home, just different terminology.
Yeah, there's definitely things to consider and to determine what product works best for you, where maybe you are just maybe you're looking at buying a property in Maine, by the beach, and you plan on going there for maybe let's just say 2 to 4 weeks in the year, and the other few months you are going to rent it out. In that situation, technically you could obtain a second home mortgage instead of investment, where maybe the down payment's a lot less or the rate's different. So like I said, it's really important to find out exactly what your goals are, what you're looking to do with the property, and then we can make sure that you're being put in the best product possible.
That's why it's very important to get that free pre-approval. Just get it where you stand. So now you have your number and now you can move forward with that.
Is there anything else you want the viewers to know about NewFed Mortgage?
Well, you can have our contact information. We're 24/7. You can contact us through our cell phone, which you can, put out there. You can email us all the time. One of us, we work as a team. We'll get back to you immediately. That's why it's 4 eyes are better than 2. Is that how it works? I don't know.
I like that. I don't know if I've ever heard that, but that's good.
So if somebody's doing something else, is another person manning. So, and I think it's good. We want to give the best customer experience possible. And I think we do a great job in doing that. And so does a NewFed. Their reviews are, you can go on their website and you can read about that, but you work, strictly, we're in the Reading office where we work out of our homes. We can work out of any place that's convenient for somebody. We can go to them to make it as easy as possible.
Yeah, and don't be intimidated. A lot of times you walk into a bank and you want to talk to the loan officer there, and he's behind his desk in a suit and tie, and he's sure he'll maybe answer a few questions, but on a regular basis, we're working with customers to help them out, and at no point are we going to say, we can't help you, because there's stuff that we can do, whether your credit score is a 500 or if it's a 700. There's ways that we should be able to help you to get you in a better position, and we're never going to judge you, right? I have dealt with customers of all different backgrounds, customers that are looking to buy a $1.5 million house, or a customer that's looking to buy a $140,000 condo it needs down payment assistance through, let's say the city of Lowell or different programs. I mean, at the end of the day, we're just normal people. We want to try to get you in the best position because it's the right thing to do. So don't think by any means we're here to judge you. If you say, oh, I have really bad credit, we've seen it all.
Yeah.
And, it's things happen in life, and we're not gonna, hold anything against you.
And like for any realtors that might be listening, like we're the both of us or one of us, we can go to those open houses at any time with a short notice to sit there and actually pre-approve people coming in. It makes it easier to, for the seller in that particular case to know which ones they should be, really focusing in on, and those that may need to now go get the pre-approval after they said, I'll take this offer, and then find out they're not. So we're open to go anywhere and do any open houses at any time.
Excellent. Well, thank you both so much. This was so much fun getting to know you better, and I look forward to seeing you soon.
Thank you so much. Thanks
Thank
for
you for having us.
Thank you. Bye.
Bye.